Good afternoon and welcome back. You're watching Business Arena here on TVP World. I am Aleksandra Marchewicz and these are the latest business headlines. The new session of Polish Parliament has just begun and it has one big item on the agenda, the national budget for 2025. The relevant bill has been approved by the government and it includes a record amount of earmarked for defense. The fundamentals of the budget are already known. The deficit will amount to 5.5% of GDP, fueled, among other things, by record defense spending, amounting to 4.7% of GDP. The budget also includes new social benefits for families with young children and a significant hike to health expenditure, amounting to more than 7 billion euros. After the bill passes in the lower and upper chambers of Parliament, it goes to the President's office for final approval. According to the Polish Constitution, the President has to receive the budget bill a maximum of 4 months after parliamentary approval. This means that the budget for 2025 will likely be approved at the beginning of next year at the latest. Poland will have to pay substantial compensation to an Australian mining firm, an international arbitration court ruled. The fine is around a quarter of what the company originally sought. Nevertheless, the prosecutor's office says it can appeal the verdict.
Coal mining in Poland is an expensive business, so much so that the Polish state is forced to subsidize it. This time, however, it'll have to pay damages related to a coal mine that failed to materialize. It was to be located in Kulik, a Polish village some 50 kilometers away from the Ukrainian border. The massive investment was cut short at an early stage because the would-be investor, the Australian mining firm Green X Metals, didn't receive the necessary environmental permits. Instead, in 2020, the Polish state granted them to Polish mining firm Bogdanka. In response, Green X Metals took legal action. Now, the Polish state will have to pay 300 million euro, as shown in a stock market note from the company. The fine might be hefty, but it is less than the 1.3 billion euro Green X Metals sought in the lawsuit, consisting of 2 arbitrages, one of which was rejected. The company will, however, receive an additional 220 million in damages based on the Energy Charter Treaty. But in a statement shared with TVP World, the General Counsel to the Republic of Poland, which represented Poland in this dispute, didn't rule out a potential appeal.
The arbitrage proceedings were single instance, but we can appeal the verdicts with general courts in London and Singapore, respectively. The decision on further courses of action will be taken once the rulings are thoroughly examined.
Following the announcement, the share price of the company, listed on the Warsaw Stock Exchange under its former name Prairie Mining Limited, rose by as much as a third, but has since erased most of its gains. The mine was to create as many as 10,000 jobs and produce more than 6.3 million metric tons of coal per year. For comparison, the entire Polish coal mining sector produced less than 50 million tons last year.
Both Hungary and the Czech Republic have released their latest inflation data. The general trend is moving in 2 opposite directions in these countries. In Hungary, inflation eased more than expected to 3% in September, its lowest since January of 2021, while Czech prices jumped above projections by 2.6% year-on-year. Despite record low inflation in Hungary, few expect the Hungarian central bank to continue lowering rates in October. After a rate cut in September, the local currency, the forint, is now at its 18-month low, and the bank doesn't want it to weaken any further. It's the other way around in the Czech Republic, where despite accelerating inflation, particularly in the service sector, markets expect the central bank to keep going with the easing drive it started in December. Therefore, a possible 25-point cut is likely. Inflation figures are of interest of anyone now and in the near future, but what about far future? How will AI, blockchain and the metaverse reshape the way we use money and interact with physical systems, financial systems? Well, don't miss our exclusive interview with Ronit Gose, the global head of Future of Finance and City Research, who will break down the technological innovations set to transform global banking. Right after the news, now back to business. A new home improvement retailer wants to move into Poland with ambitious plans to expand its footprint and create jobs. However, the competition in this particular market is fierce. Y will open 4 stores before the end of 2024 and add another 6 in the first quarter of 2025. The chain plans to hire around 1,000 people and will compete in a congested market with more established players like Bricomarché, Kik, Action and Eula. Mr. DIY began operations in 2005 and currently has 4,000 stores in 12 countries, mainly in Southeast Asia. Poland will be the chain's second EU country after Spain. Previously, the company also announced plans to expand into Romania and Bulgaria. The Warsaw Stock Exchange is back in the spotlight. Convenience store giant Żabka's IPO is not only the biggest here in Poland, but also one of the biggest in the world this year.
It's hard to find a major street block anywhere in Poland without Żabka's distinct green logo. Now, investors will be able to take part in the brand's enormous success. Private equity fund CVC Capital Partners and other Żabka owners will raise over 1.5 billion euro in this sale. The IPO has also had global reverberations. It made it to the top 10 offers so far in 2024, trailing just behind Viking Cruise Lines. And of course, this year's champion, Lineage, the world's largest real estate investment trust for temperature-controlled warehouses. With interest overwhelming brokers, the price has been set at the top of the range at €5 per share. They're selling 300 million shares, which adds up to a 30% stake. This will also be the 4th largest IPO in Warsaw Stock Exchange history, and the largest since online marketplace Allegro's record €2.6 billion offer back in 2020. The listing of the 10,000 store brand follows a period of impressive revenue growth of 21% in the first half of 2024. The company wants to use the funds raised in this offer to launch an aggressive expansion that'll see it almost double its locations to a planned total of 19,500. A maximum of 5% of the shares will go to retail investors. This gives a total of 15 million shares, the value of which at the maximum price for retail customers is just over €75 million. The stock will begin trading on the exchange next week on October 17th. The deal may also breathe new life into the Warsaw Exchange. Croatian food retailer Studenac and medical testing firm Diagnostica may be next to list in Warsaw.
And that is all for our latest business news updates. But for more of the latest stories, check out tvpworld.com.